to a low carbon economy. The climate risk disclosure framework is aimed at enabling banks to integrate climate-related risks into their governance, strategy, risk management, and disclosure frameworks. It is also intended to enable banks to leverage on business opportunities from efforts to mitigate and adapt to climate change. And third, issuance of guidelines on global liquidity standards and leverage ratios. The Central Bank of Kenya in April 2025 issued guidelines on liquidity coverage ratio, net stable funding ratio, and leverage ratio for the banking sector. These guidelines will enhance the banking sector's liquidity and capital frameworks to promote greater financial stability and resilience, thereby ensuring that banks have the ability to withstand unexpected shocks, maintain stable funding, and manage their risk profiles effectively. Mr. Speaker, the Central Bank of Kenya, in collaboration with the National Treasury and other stakeholders, are developing the National Financial Inclusion Strategy for the period covering 2025 to 2028. The strategy provides a consolidated framework for advancing financial inclusion agenda to meet the needs of all Kenyans through deepening access and usage of financial services, enhancing quality of affordable financial products that meet consumer demands. Mr. Speaker, to strengthen digital finance in Kenya, the government will continue to implement the National Payment Strategy for the period 2022 to 2025 and fast-track finalization of a national policy on digital finance. In order to reform and modernize the national payment system, Central Bank of Kenya is doing the following. 1. Undertaking a comprehensive review of the national payment system legal and regulatory framework. 2. Implementing a fast payment system that seeks to address persistent challenges in interoperability, affordability, and the high cost of digital transaction. And third, effective 1st July 2025, the Kenya Electronic Payment and Settlement System will transition to a 24/7 settlement capability. This will support round-the-clock trade, enable faster clearing of government payments, facilitate real-time business-to-business transactions, and provide greater flexibility for consumers and financial institutions. Mr. Speaker, following the grey listing of the Republic of Kenya by the Financial Action Task Force in February 2024, the government has continuously addressed the technical deficiencies identified in Kenya's Mutual Evaluation Report, which was published by Eastern and Southern Africa Anti-Money Laundering Group in September 2024. Mr. Speaker, as you are aware, one of the technical deficiencies identified in the Kenya's Mutual Evaluation Report was lack of a policy and regulatory framework to the virtual assets and virtual assets service providers. In order to regulate this sector, the government has developed the Virtual Asset Service Providers Bill 2025, which is currently before Parliament. Again, I urge honorable members to fast-track its enactment. On capital markets development, to further deepen the capital markets, the government continues to review the legal and regulatory framework to address emerging issues in the sector. In particular, the government overhauled the public officer regulations and collective investment schemes regulations to spur uptake of products while ensuring that investors are protected. The government has also approved new regulatory frameworks to support credit ratings and alternative investment funds, which have attracted a lot of interest from investors. Further, the government is in the process of reviewing the regulatory frameworks for licensing, margin trading, conduct of business for market intermediaries, and mergers, acquisitions, and takeovers. Once in place, these regulations will reinvigorate capital markets activity and make our capital markets more facilitative and efficient. Mr. Speaker, to diversify the government sources of financing, a Sukuk bond has been issued while other Sharia-compliant products are in the pipeline. The first Sukuk bond raised 3.2 billion, which has been effectively deployed in the affordable housing program and pension reforms. Mr. Speaker, in the Tax Laws Act, Mr. Speaker, now I turn to the pension reforms. Mr. Speaker, in the Tax Laws Amendment Act 2024, we introduced a number of incentives aimed at increasing disposable income to our senior citizens once they retire. And I thank this Honorable House for passing this Tax Laws Amendment Bill in December. We, among others, increased tax deductible amount, removed tax on all retirement benefits, and introduced tax exemption on pension savings towards post-retirement medical schemes. Mr. Speaker, despite the reforms introduced in this sector, benefit adequacy remains a persistent challenge. Many retirees still find their pensions insufficient to meet their basic needs. And Mr. Speaker, the retirement benefits system predominantly covers the working population in the public and private sector to the exclusion of the unemployed population, who are majority in the informal sector. To address this, the National Treasury, in collaboration with key stakeholders, is implementing the National Retirement Benefits Policy. This policy outlines a clear, forward-looking strategy to address long-standing structural challenges, such as fragmented legal frameworks, exclusion of informal sector workers, limited medical cover for the elderly, weak portability mechanisms, and inadequate dispute resolution structures. Mr. Speaker, the government remains committed to fulfilling its obligations to retired public servants while ensuring that our pension systems is modern, inclusive, efficient, and sustainable. In this respect, the government is undertaking reforms aimed at delivering faster, more transparent, and citizen-friendly pension services. Key among these reforms is the re-engineering of the pension management information system, which, together with the launch of a pension self-registration platform, will significantly improve data accuracy, enhance biometric verification, and reduce pension processing time from several months to less than 30 days. These reforms will also ensure real-time claims tracking and integration with the national identification and payroll system, reducing errors and potential leakages. The re-engineered pension management system is planned for rollout on 1st of July 2025 and will transform pension administration by 1. Enabling ministries, departments, and agencies to submit pension claims online at source through integration with government human resource systems. 2. Allowing pensioners and beneficiaries to access services remotely and track the status of their claims in real time. And 3. Providing automated updates to clients on the progress of their claims through system-generated notifications. On insurance reforms, Mr. Speaker, to facilitate the growth of the insurance industry in Kenya, the government will speed up the approval of the National Insurance Policy and its implementation. The policy will guide the review of the Insurance Act, which has served its purpose, albeit with progressive amendments for the last 30 years. Mr. Speaker, the Insurance Regulatory Authority is undertaking focused training on livestock and crop insurance, targeting farmers and pastoralist communities. These efforts are aimed at improving understanding and access to agricultural insurance as a tool for mitigating climate-related risks and protecting livelihoods of farmers and pastoralist communities. The authority is also conducting a comprehensive money laundering